There was information revealed about some of the information that you were announcing in the House that day. So it was, sorry, forgive me, sorry, on the welfare figures. The extra 500 million.
Right. I have, that hasn't been raised with me, or I don't think the permanent secretary. There is often speculation ahead of a spring statement or a budget. I don't know which information you're referring to, but the Secretary of State for Work and Pensions, the week before the spring statement, set out the details to the House about the welfare package, and then said in that statement that those numbers would be scored by the Office of Budget Responsibility.
Okay, just further information. What we'll do then, we'll write to the Permanent Secretary, because if there's an inquiry going on, and to see whether it's considered as part of that inquiry.
Yeah, can I just also say, Chair, if it's okay, that we have reduced significantly the number of people who are on circulation lists ahead of fiscal events because of concerns that we had last year about information appearing in the public domain before I delivered the budget, and so ahead of the spring statement we did curtail the list and do everything we can to keep that information secure. It's not in the interests of the government, me as Chancellor, or indeed the Treasury, for this information to be in the public domain. As Will McFarlane has said, often this information is market sensitive, and it is both discourteous and dangerous to leak information if that is indeed what happened.
Well, we appreciate, Chancellor, your commitment to not having leaks on that.
Chair, if I may, just because you're going to write to the Permanent Secretary, perhaps I can also help with that.
No one actually told me, he said, when he was chairing a committee, that the spending review process was, or what it was, or how to intervene or lobby on it effectively. And we're hoping that he will be able to come. We put that invitation in. Would you be supportive of the Chief Secretary attending the Treasury Select Committee ahead of the spending review? It's you're expecting it to be the only spending review of this Parliament. It's a significant spending review for 3 years. And it's, we would like to know really the process that you're putting in place to make it as transparent as he's promising it will be.
I got huge respect for select committees, as does the Chief Secretary, both of us having previously chaired select committees. I know you've written to the Chief Secretary, and we will look at that invitation. But we always want to be transparent and give information to select committees. So, but can I just also say it won't be the only spending review of this Parliament, because we have committed to do 3-year spending reviews every 2 years. So we will do another spending review in this Parliament.
So I think you just announced an election date. No.
Well,
yeah,
the point is a really important one, because one of the reasons we've had some of the challenges we faced as an incoming government is there hadn't been a spending review for a number of years, and obviously in that time inflation had been very high, and so the cost of delivering public services had increased, and yet no spending review or no settlements have been made with departments. So we have committed to do those 3-year reviews every 2 years, so the last year can be updated. I think it's really important that we do that.
So, just to be clear, so when there is a review, it won't be for the 3 years following the end of this one. It could review that 3rd year of the spending review.
Yes, absolutely, because things happen in the preceding times. It's also why we're setting, though, at the spending review a longer trajectory for capital spending, because those decisions are often over a number of years. But obviously we'll make sure that evidence is given to the committee after the spending review, and also subsequent spending reviews and statements and budgets and the like. We'll take those responsibilities very seriously.
Well, we're quite keen to hear about it beforehand, because this is, as the Chief Secretary and yourself, but particularly he's repeated consistently, that this is a zero-based review. All departments, we're looking at every line of their spending. So the process, as well as what decisions we made, obviously we'd appreciate it might be hard for him to tell us the final decisions in advance of the spending review. That would be rather challenging. We're not expecting that, but it would be helpful, I think, and given this government's commitment to transparency and openness, I would hope that this would be something that you would welcome.
Well, let me have a look at that that idea. But I think hopefully you've already seen, Chair and committee members, how seriously we take the scrutiny process of select committees.
Okay. And just finally, from me, before I pass to Bobby Dean MP, we had the Office of Budget Responsibility in front of yesterday, and I used the opportunity to ask Richard Hughes about his potential reappointment. He's coming to the end of his 5-year term, as you know, in October. He has said he's written to you, indicating that he would be willing to have a second term. Have you got any indication of when you will be making a decision on that, or is there anything you'd like to tell us today?
Yes, so we have received a letter from Richard Hughes. We will be responding to that, and of course, you will be the first people to know about that, as is right and proper. We've been really focused on the spring statement the last few weeks, but we will respond in the proper way. And I want to take this opportunity to thank Richard and the other members of the BRC, David Miles and Tom Josephs as well, for the huge amount of work they put into supporting the forecast process and the analysis of the different measures, both at the budget last year and at the spring statement last week.
I completely appreciate you being very busy with the spring statement. Do you have any idea of the timescale for when you will make a decision on Richard Hughes' position?
Well, his term is up on the 3rd of October, so we recognise that we need to make those decisions quickly, and you will be the first people to know when we've done that.
Well, thank you very much for that.
Thank you.
Bobby Dean, MP.
Thank you, Chair. The OBR play a big role in our sort of national debate now, with their forecasts influencing an awful lot, and they've come under a bit of scrutiny for that recently. Not necessarily for their independence or for the quality of their work, but for the reliance on their forecasts alone to kind of dictate Britain's economic policy. I just wondered if you had a response to that, whether or not you thought that a plurality of forecasts in these moments might be useful, or if it's still good to have just one set of forecasts.
Well, obviously a number of people do forecasts that we look at and take seriously, including the Bank of England, who publish a forecast 4 times a year, and that's very useful. The IMF, the OECD, many independent institutions as well provide those forecasts. So, it's not the only forecast available, but I think what is important is that you have an independent forecast and independent scrutiny, and I guess that's what the OBR can do that other forecasters can't. We give them the information ahead of changes in policy so that they can look at, scrutinise, and also scrutinise directly the people making the policy, not just the Treasury, but the different government departments and the people making those policies. So I think that the OBR does have a unique role in our public life and play a very important part in providing the economic stability and security that all of our constituents, families and businesses need. So, I very much pay tribute to the work that the OBR do in keeping us on our toes. It's not always an easy process, but I think we saw what went wrong when the OBR weren't asked to do a forecast in the mini-budget 2.5 years ago. It's not the only reason that the economy crashed afterwards. It was because of the unfunded tax cuts, but part of the contributory reason for those economic events that unfolded afterwards was the undermining of independent economic institutions. So not allowing the OBR to do a forecast, sacking the respected Permanent Secretary of the Treasury, Tom Scholar, and also undermining the independent Bank of England. So, I do take the role of the OBR incredibly seriously in this process.
Okay, thank you.
Thank you.
And of course, they produce 2 forecasts a year, but you're committed to 1 fiscal event a year, which I think you define by making adjustments to tax. Given that the forecasts are instrumental in determining your headroom, and you're going to want to be responsive to that to make sure that you maintain your fiscal rules, do you fear that being out of sync means that you've got one hand tied behind your back in these processes by not being able to pull the tax lever as well as the spending lever?
I think it's really important that we do have just one major fiscal event a year, because families and businesses do crave stability, and in the last Parliament there were a huge number of fiscal events, mini and otherwise, and that sort of constant chopping and changing of tax rates and thresholds contributed to the economic uncertainty and volatility of that period, which had a direct impact on business confidence, consumer confidence. So that's why we have made the decision as a government to have just one major fiscal event
I guess my question though is it important to you to have 2 forecasts a year? Because I guess if it's really important to you to have 1 fiscal event a year, is it important to you to still have 2 forecasts a year? Because obviously it restrains you in those moments if you're only committed to have a fiscal event once a year.
No, I don't feel that. The OBR incorporated the latest economic news, news from financial markets, and we updated our plans on that basis. We could have chosen to say we would address issues of the headroom at the budget, but I did think it was important to show how important we take fiscal sustainability, fiscal stability, and so that's why we made the decisions we did at the spring statement to restore the headroom. But that was the choice that I made as Chancellor.
Thank you very much, Ms Dean. Dr. Chief Sander MP.
Thank you very much, Chair. Thank you, Chancellor, for coming to this committee. I want to ask you about your growth targets and how you aim to hit that in every part of the country and how important you think it is that we do so. So at the moment, for example, London's productivity is 26% higher than the national average. So in your view, hitting your national growth target, how important is it to increase productivity in the regions outside of London?
It's absolutely crucial. I mean, achieving strong economic growth is not just about lines on a graph. It is about the money people have in their pockets, and we want to see economic growth and the benefits it brings felt in all parts of the country. That's why at the budget last year, we put significant investment, for example, into upgrading the Transpennine route. It's why the National Wealth Fund have made a number of investments, including in mining in Cornwall, in projects around the country, including upgrading social housing with better insulation. So it's very important to us that we do feel that growth everywhere. It's also why at the Investment Summit last year we were pleased to announce investments into data centres, energy projects in all parts of the country, and it's why as a government we were pleased to be able to announce investment alongside Shell and Equinor in carbon capture and storage in Teesside and Merseyside. So we do look through a sort of geographic place-based lens in terms of the economic policy making. It's also why yesterday we uplifted the national minimum wage and the national living wage, giving a pay rise to 3 million working people, majority of whom are outside London and the South East.
Yeah, that's very helpful, Chancellor. I suppose more broadly alluded to some of it. Good jobs, a lot of projects there, a lot of great capital projects, but good jobs outside of London have been quite scarce in recent decades outside of London in the regions, kind of lower job and security. So the average wage of a non-graduate, particularly in post-industrial areas, is about 26,000. You need 28,000 to live a decent life, and that's without having any dependents on the side. Do you see there's a Treasury having a strategy to get those good non-graduate jobs outside of London? Is that being built into your policy making?
Yeah, it's why my colleague Bridget Phillipson, the Education Secretary, has announced reforms in terms of apprenticeship programmes, for example, so that relaxing the requirements around maths and English at GCSE for foundational apprenticeships to expand the number of apprenticeships we're able to offer. It's why just ahead of the spring statement we were pleased to be able to announce 60,000 additional places on construction courses to help create good quality jobs paying a decent wage. It's also why we're introduced the Employment Rights Bill to ensure that security and dignity always come through work by getting rid of exploitative zero-hour contracts, fire and rehire, and giving additional rights to workers from day one, including access to sickness benefits. So we are determined, both through some of the supply side reforms and also through employment law, that we are improving the conditions of work and improving the wages of work in all parts of the country, including those on the lowest paid.
That's very helpful. And on the construction jobs in particular, do you know if that money is yet being targeted to areas that need it the most, or is it at this point a national figure, a national target?
So we have committed to a technical excellence college, one in each region of England, because we want to be building homes in all parts of the country. We've got ambitious targets, 1.5 million new homes in England during the course of this Parliament. Really pleased in the OBR's forecast that they scored, the changes that we've made to the National Policy Planning Framework. They've said that those changes alone, which are the changes I announced on the first Monday in my role as Chancellor, They forecast being £6.8 billion bigger by the end of the forecast period, contributing £3.4 billion in additional tax revenue. But to be able to build those homes, we need people with the skills to be able to build them. And we know that the construction industry workforce is older, and we of people, and so actually part of that package of measures is incentives for people who have worked in the sector in the past to train people at FE colleges, which is absolutely crucial. And when I was at Bury College just a couple of weeks ago with the Education Secretary, being a not very successful bricklaying apprentice on that visit, those courses are 2 or 3 times oversubscribed. And, you know, we sort of say there's 1 in 8 young people not in educational employment or training, and often that is the fault of policy making, because you've got young people that are desperate to get the skills to get on in life, and yet they apply for a course and they're told it's full. And we want to change that, which is why we're extending the number of both apprenticeships but also construction courses so that more people can get the skills that they need to succeed in life.
That's very helpful, thank you, Chancellor. To Mr McFarlane, I've asked your colleagues about the Green Book and some reforms you might consider, and continuing the theme on reforms, looking at maybe Ms Tinsley instead. Whoever's most appropriate. Maybe look, a strategic question, a technical question, but if the technical question did come back on, that's completely fine. Previously, when officials from the Treasury have come to this select committee, they've said that the benefit cost ratio, the tyranny of BCR, that departments are told not to rank it simply by the project number which has the highest BCR. When I've spoken to departments, when I've spoken to people in the transport sector, and I say it's an East Midlands MP that has the lowest transport spending in the country, they say very much that tyranny of the BCR still exists, and because of that, means less in transport infrastructure projects outside of London. Strategically in the Green Book review, are you planning to send a message out clearly to departments that actually that's not the way to make expenditure decisions, and particularly consider the strategic case on transport projects?
Can I just say something first on that? It was the Mayor of Merseyside, Steve Rotherham, who has mentioned this to me more than anyone else, both when we were in opposition and since we were elected into government last year. I recognise from the conversations that I have with many of our mayors that, as you call it, the tyranny of the BCR does have a very real impact on investment decisions, which is why I instigated this review of the Green Book, so that we can see that investment in capital projects in all parts of the country. But I'll pass on to one of the officials.
Thank you,
so I think, as the Chancellor says, the short answer is yes. I mean, this was identified in the Green Book review in 2020, and I think it does currently make clear that the BCR is only one part of a wider balance judgment, but I think it is still recognised that continues to be a problem, which is exactly why the Chancellor announced the subsequent review in January.
That's very kind, thank you, Chair.
Thank you very much, Dr. Sander. Yuan Yang, MP.
Thank you, Chair, and thank you, Chancellor, for coming forward with your team. I was sat in the audience when the Prime Minister announced his key milestones for this government at the end of last year, and the twin economic milestones of higher growth and higher living standards in every region of the country. Firstly, could you set out why it's important to you to have those twin objectives, and whether there may be measures that would promote, say, living standards but not growth, or vice versa, and why there are 2 of those measures, milestones?
Well, thank you very much for that question. We want to see economic growth. Economic growth is important for the competitiveness of our country. It's important for improving living standards. Economic growth is also crucial for providing the money that we need for our public services, alongside reform in our public services. And I think there's no better proof point of that than the Office of Budget Responsibility scoring our planning reforms. Because what they say is, as a result of the National Policy Planning Framework, we're going to build more homes every year and reach a 40-year high in terms of house building, which obviously has a direct impact on people's lives. It helps create the jobs in the construction industry. My answer to the previous questions also provides the homes that all of our constituents tell us on a regular basis are desperately needed, because home ownership is going backwards, and too few people have the security that a home brings, but also it is directly contributing to the public purse by bringing in revenues, not by raising taxes, but by making the economy bigger, and so increasing tax revenues. So economic growth is incredibly important. But none of our constituents say, I feel much better off because the economy is growing. They feel better off if they've got more money in their pockets. And that's why we are also measuring real household disposable income as part of our plan for change. And we're very pleased that in the spring statement, if you look at the numbers published alongside it, that compared to the spring budget last year, 2024, if you look at RHDI in every year of the Parliament, on average, it's £500 more per year. That's more money in people's pockets. Do I want to go further and faster on both growth and living standards? Absolutely, we do, which is why we're not stopping with the National Policy Planning Framework. It's why we're taking through the Planning and Infrastructure Bill in Parliament at the moment, and that is absolutely crucial for growing the economy, building the infrastructure that we need. It's why we're embarking on the big capital markets reform, to reform our pension system, to get more money invested in the economy, and so much more besides. But the planning reforms, already some of those have been scored. We want to see more of them scored because we want to grow the economy and make people better off in all parts of the country.
Thank you, Chancellor. I have some specific questions about metrics where it may be appropriate to bring in your team as well. Firstly, is there a regional aspect to this metric? Because as the Prime Minister mentioned, higher living standards in every region of the country.
Yeah, so there are some measurement issues on being able to measure RHDI per head, but we are determined to ensure that growth benefits all parts of the country. Will, did you want to say anything more about that?
No, okay. The OBR in its outlook explained that much of the £500 you mentioned comes from imputed rent, which it describes as what homeowners would receive if they rented out their income. And that makes the boost less tangible for households because it's an imputed measure rather than a cash in your pocket measure. So I appreciate this is quite a technical conversation about the metrics, but I was wondering if you had any comment to what the OBR said on that, or perhaps one of your staff.
Well, another measure you can look at is GDP per capita, and that fell in the last Parliament, and the OBR forecast that it will increase, I think, by around 5.5% during the course of this Parliament. So obviously there are different measures, but whether you're measuring RHDI or you're measuring GDP per capita, both of them are forecast to rise. That's after the last Parliament, which is obviously the worst on record for living standards.
And I don't have a technical answer to your question, Miss Yang, other than to obviously repeat the kind of Chancellor's points that the Prime Minister has set out a focus on RHDI per capita. We are looking at means to kind of evidence that regionally in terms of your previous question, and there are also a basket of measures here that we look at in terms of the impacts of policy, distributionally and regionally. The two that the OBR focus on, and therefore sort of most, I think, drive our analysis around their forecasts and fiscal events, are RHDI per capita and GDP per capita. Positive news, I think, in their latest forecasts for what the government is doing, as the Chancellor has set out.
Yeah. Do you know how much of that £500 comes from the imputed rent measures, or is that something that perhaps you can set out to the committee later in writing?
I think we need to set it out.
Yeah.
Thank you very much, Ms. Yang. Lona McAvoy, MP.
Thank you, Chair, and welcome, Chancellor. So I want to talk a little bit about productivity and the productivity puzzle in this country. So public capital investment dropped historically low over the last government, and Dr. Salaheen told this committee yesterday that our low public capital investment is one of the reasons that we've lagged behind the productivity rates and the bounce back of the US and other EU economies. Can you outline your approach to public capital investment as a percentage of GDP?
Yes, so let me first of all give you the numbers in pounds, and then I'll say a bit about percentage of GDP. So the fiscal rules that we are using as a government are first a stability rule that we have to pay for day-to-day spending through tax receipts, and then the second is that we bring down debt, public sector net financial liabilities as a share of GDP in this Parliament. And the second fiscal rule is so important. So I think it is really important that you pay for what you are spending with tax receipts for day-to-day spending. But it is also really important that we are able to borrow on capital markets to fund long-term investments, whether that is in energy infrastructure, transport infrastructure, technology, or indeed new schools and hospitals, because obviously the return of those comes over many years. And in the past, to meet the previous fiscal rules, you could just cut capital spending, and the impact of that wasn't felt until later on. But the problem is that then at every subsequent budget or fiscal event or every year, you're not benefiting from the capital investment that you cut in the past to make the numbers add up. And that's why we're measuring public sector net financial liabilities, because we're for the first time accounting the benefits of investment, not just the costs of it. And it's why we've taken capital spending outside of the stability rule. And as a result of that, in the budget last year, we were able to announce an additional £100 billion investment into CDL capital projects during the course of this Parliament. And actually, despite the deterioration in the sort of fiscal position in the spring statement last week that Mr. Dean was alluding to earlier, we were actually able to increase the capital investment in the spring statement last week by a further £13 billion over the course of this Parliament. And in the OBR's last forecast last autumn, they said that that additional capital spending, if maintained, would increase the size of the economy. As a result of what we're doing, we took capital spending as a share of the economy from it's due to fall to 1.6% of GDP under the plans that we inherited, and instead will stay around 2.4% for the duration of this Parliament. So that is the extra percentage, 0.8 percentage points that 100 billion brings. But it also brings with it better transport for our constituents, more secure energy produced in this country, better digital technology so that we can exploit some of those jobs and opportunities of the future, help us rebuild our schools and our hospitals, particularly our schools where the roofs were literally crumbling in, and to build and to upgrade those hospitals. So I was really pleased, and I think in terms of the long-term impact of both the budget and the spring statement, the biggest long-term impact that we've made so far as a government is to unlock and maintain that capital spending because of the fiscal rules and because of the prioritisation we've placed on rebuilding our country and the infrastructure in it.
So I was just going to say thank you for that. So 2.4% GDP, and then I think Dr. Salaheen said that there was around 4% in some of the other thriving economies. Do you think, is it the sum of our ambitions 2.4% within this Parliament, or do you think if we get growth, we're at a higher rate, we'll be able to look at more capital investment?
Mm-hmm. I mean, I think you can tell how keen I am to make sure that we are investing in that infrastructure. It's also why we're using things like the National Wealth Fund to leverage in private sector investment, because that 2.4% of GDP in the final year of the forecast, actually it's higher in some other years. Thank you. I'm underselling what we're doing. It's 2.7% earlier in the Parliament, but in the last year it's 2.4 compared to the 1.6% that we inherited. But in addition, the National Wealth Fund is leveraging in private sector money. The report that Mark Carney, former Governor of the Bank of England, now Prime Minister of Canada, did that review for us when we were in opposition.
Wealth Fund, so
but the idea of that is that it leverages in 3 times as much private investment as public investment we put in.
So just a final one from me on the National Wealth Fund. So what's your analysis of the balance of risk for projects from the National Wealth Fund? So do you think the primary objective of the National Wealth Fund should be to de-risk other new projects, new ideas, so that the private investment can come in behind it, or do you think it should be to get a good deal for the taxpayer from that share that we put in for the less riskier projects?
I mean, it's got to do a bit of both. I think you've seen from the remit letters that I've given to the regulators, financial service regulators, and the work that the Prime Minister's been leading on about better regulation, is saying that we should regulate for growth, not just for risk. I think that's really important. If you only cared about risk, you'd never get out of bed in the morning, and that's no good for individuals, and it's certainly no good for an economy. And so I think being able to invest in things and taking a bit of a risk, it's not a bad idea, because you don't never take a risk, you'll never succeed. And so we're absolutely keen that both the National Wealth Fund but also the British Business Bank is able to take a calculated risk. This is taxpayers' money. It's got to be a calculated risk. But also, you're absolutely right that what a lot of businesses say to me is that once they get money from the National Wealth Fund or the British Business Bank, that says to other investors, someone's done a lot of due diligence here. If taxpayers are willing to put their money in, then us as institutional investors or venture capital or whatever also then put. And there's so many great examples of businesses that have had support from the British Business Bank who are then able to go to market and access more. In fact, I met with Quidexo yesterday, one of the UK massive success stories, a unicorn firm, and I think in their Series C or Series D funding got £10 million from the British Business Bank. They've just done their Series F funding, and I think they raised £200 million on that, with more money from the British Business Bank. But they spoke very passionately about what the British Business Bank had enabled them to achieve as a business.
Okay, thank you for that. Dame Harriet Baldwin MP.
Thank you very much, Chair. And Chancellor, you've made it clear already in today's evidence how much you value the work of the Office for Budget Responsibility, the IMF and the independent economists who helped sort of frame the UK guardrails effectively. And I note that in their Article 4 examination of the UK economy last year, which was published on the 1st of July, the IMF said this about the UK economy. It said, growth is recovering faster than expected, inflation has fallen rapidly to target. And then you became Chancellor on the 5th of July, and the budget came out at the end of October. And I was very struck by the difference between the report that the Office for Budget Responsibility put out last October and the one that was published last week with your spring statement. In those 5 months, their forecast for inflation this year has gone from 2.6% to 3.2%. Obviously, you highlighted the fact that their growth forecast has halved from 2% to 1%. They're also expecting UK borrowing, to be £47.5 billion higher in the forecast period. They're expecting unemployment to go from 4.1% to 4.5%, despite the welfare reforms that were announced alongside the spring statement. They're expecting debt interest to be over 30 billion higher over the next 5 years. They're expecting, at the end of the forecast period, for there to be more children in poverty than in their last report. This is also awful April. Bills are going up for households across the country. We've got tariffs, no doubt, being announced later today. I just wondered to what extent you recognise now that business confidence and consumer confidence took a real hit after your budget in October.
Well, you started by talking about the IMF, and the IMF were very supportive of what we did in the budget last year to put the public finances back on a firm footing, and they were also very supportive of the fiscal rules that we announced, both to bring stability to the public finances but also to unlock private investment. So I was very appreciative of the support both from Kristalina Georgieva and Gita Gopinath at the IMF for the work that we are doing to bring stability back to the economy, and through our modern supply side approach to bring growth back. And you mentioned the OBR forecasts around growth for this year. Well, as you will well know, the OECD and others have downgraded a range of countries in the G7 and the developed world. But the OBR have also revised up growth in 2026, 2027, 28 and 29, and they forecast that by the end of the forecast period the economy will be bigger than they forecast the Conservatives' last budget, and indeed bigger than they forecast the budget that I delivered last autumn. So if you take it in the round, the OBR are saying the economy will be bigger. They put that down to the planning reforms that we've instigated, and the IMF have welcomed what we did at the budget last year.
But Chancellor, the IMF, as you rightly say, you are following a lot of the recommendations in their Article 4 report on the UK economy. You must acknowledge, you cannot deny the reality that since October last year and the spring statement, growth in this economy, the confidence of businesses, the confidence of consumers has been considerably worse than you were hoping for when you announced that budget. I mean, you must be able to see that.
Well, I absolutely accept that there are costs of any policy, whether it's on spending or tax, but there are also costs of irresponsibility. And just imagine if last October I hadn't have taken the action that we did, to put the public finances on a firm footing, to put more money into the NHS, which has seen for 5 months in a row NHS waiting lists fall and 2 million additional appointments in the National Health Service, reducing those record waiting lists that were bequeathed to us by the previous government, but also because we've brought stability back to the economy. When the world changed, as it undoubtedly has these last few months, we were able to uplift the spending we put into defence to take it to 2.5% of GDP within just 2 years, the biggest sustained increase in defence spending.
Only by taking away money from the international development budget.
Yes, but if we hadn't have made those decisions last October in the budget, there would have been other demands on those budgets. So, you say only by doing that, I'm afraid your party had 14 years to put more money into defence, and in fact money fell on defence spending. I'm genuinely interested in the decisions you have taken since you've become Chancellor. And what I'm not hearing is, in terms of these economic statistics since your budget last October, is anything that has got better in terms of these economic numbers. In fact, in your Treasury own document, in terms of the measures, and you cited the planning reforms as being a helpful supply side that have helped the Office for Budget Responsibility increase the growth of the UK economy. But in your chart 1.1 in the Treasury document published alongside the spring statement, it specifically spells out that the autumn budget measures in terms of crowding out and employer national insurance have actually reduced the UK economy. Surely you can accept that it's your measures that have had some of this impact in terms of the deteriorating statistics that I've mentioned since October. Chancellor. So I've said that, of course, there are always costs to any policy on tax or spending, but there is also a cost of the counterfactual. And the counterfactual would have been leaving the public finances on an unfirm footing to embed the instability that was bequeathed to us by the previous government, and it would also have meant further increases in NHS hospital waiting lists. So we increased national insurance contributions and we put £25 billion extra investment into our National Health Service. We think that was the right priority. Now, other people would say, no, don't put more money into the NHS, and that is absolutely their right to say that. If you want more money into our NHS to reduce waiting times, and we have now for 5 months reduced NHS waiting lists with 2 million additional appointments, if you would prefer not to put that money into the NHS, you're absolutely at liberty to say that, but you have to be honest, because if you want that extra money, you have to support the taxes to pay for it.
Well, we can monitor the impact of that as time goes by, but in terms of the number that you just cited to this committee, which was the £500 a year extra in real household disposable income, could you just help the committee out, because I wondered which official document that's actually published in?
Well, it's from the OBR numbers, and I already have given that answer to Yuan Yang. So if you take the spring budget from the previous Chancellor, Jeremy Hunt, and you look at the OBR's forecasts for real household disposable income in that forecast, and you compare it to the forecast that they published last week, and you look at RHDI per year, every year, and you look at the contrast between those two.
So it's £500 per year per household.
As I already have said in the previous answer, it is the average. So some years it's more than 500, some years it's less. 500 is the average additional RHDI for the spring statement I delivered last week compared to the last budget that the Conservatives delivered. And in that time, the OBR forecast that on average RHDI per person will be £500 more now because of the actions we've taken compared to the plans bequeathed to me by the previous government.
And the deterioration in terms of the economic statistics and the OBR's forecast since last October until now, March, do you recognise that has caused some consternation in terms of the way that the markets have dealt with the amount of gilts that the UK has to issue, and that it has put us much more, and the Office for Budget Responsibility confirmed this, much more at the mercy of the markets, because we have increase the borrowing by the amounts that I read out earlier?
Well, the Office of Budget Responsibility say that 3/4 of the deterioration in the fiscal position since the budget last year was to do with movements in government bond yields. And you'll know that our bond yields have moved in line with our European peers.
They said a bit worse, actually.
Well, actually, if you look at us compared to Germany and France, I think it's we've moved in line with our peers, and that is what the Office of Budget Responsibility confirm. But look, when I became Chancellor, national debt as a share, national debt was twice as high as when Labour left office in 2010. And as a result of that, we are spending £105.3 billion on debt interest payments. That's more, let me finish answering your question. That's more than we spend on defence, the Home Office and the Ministry of Justice combined. That's why it's absolutely essential that we have returned fiscal stability to the economy and are beginning to, as the OBR confirm, bring down debt, public sector net financial liabilities as a share of GDP. It is essential that we do that, because I would rather spend money on the priorities of the British people rather than on servicing the debt left to us by the previous government.
But you have increased debt. Thank you, Chair.
Yeah, I think, we just should acknowledge there was a pandemic in the middle of the last Parliament, whichever party was in power.
And a mini-budget that crushed the economy.
Well, indeed,
both of those things.
But I think that the pandemic would have hit everyone, so it's just for balance. Picking up on what Dame Harriet was saying, one of the challenges of the last budget and the announcements on the national insurance contribution for employers is some businesses and business sectors have said that people have paused investment or recruitment. Do you have a concern about that, and have you got any words of comfort about what might lie ahead for those businesses that have been particularly hit with higher wages by the end, when the new financial year kicks in, higher staffing bills as a result of this?
As I said in my answer to Dame Harriet's question, of course there are always consequences of any tax changes that a government makes.
But do you worry that it might mean that some businesses are not putting in the money that they could be putting to grow sometimes those small jobs that Dr. Sander talked about that are important in areas where there are perhaps not those big industries and businesses that will create the growth which we all want to see, I think all around us, whatever party around this table, but they won't happen in the next couple of years because these are bigger infrastructure projects. Yeah. Do you have any regrets or any thoughts about that? Have you had any conversations with businesses that's made you rethink what you did last autumn?
As obviously I speak to businesses on a regular basis, including a breakfast that I hosted this morning with some of the UK's biggest exporters. But if we hadn't have taken the decisions that we made, we wouldn't have been able to ensure the stability of the public finances. And when you lose control of the public finances, interest rates go up and bond yields go up further. And since we came to office last July, the Bank of England has had the confidence to cut interest rates 3 times. That's very different from what we experienced in the last Parliament, and as a result borrowing costs not just for families but also for businesses has fallen. And if you look at vacancies in the economy, they've stabilised. If you look at the forecasts from the Office of Budget Responsibility about employment during the course of this Parliament, they forecast that employment is due to go up. And in terms of small businesses, and I think this is really important, the smallest businesses, for example, if you're employing 4 people on the national living wage, you will come out of paying national insurance altogether, because we increase the threshold at which you start paying national insurance. So I do recognise that the costs on the smallest businesses would have been the most severe, which is why we've excluded them. And actually, some small businesses who were paying national insurance previously are now not paying any at all.
So from where you're sitting, what metrics are you looking at to see that those small and medium-sized businesses, which are the ones that perhaps have potential to grow, and particularly to grow in some of those areas of the country where, as I said, there aren't other really big options, what metrics are you looking at to see how successful they are, and whether you know what support they may need to create those jobs after the changes that will kick in at the end of this week?
Well, obviously, I regularly talk to businesses, including the business representative bodies, and the Federation of Small Businesses welcomed the lifting
so we're talking
of the
to them, I get that, but people will often say nice things to a Chancellor. I'm sure they say not so nice things to you as well at these business breakfasts if they want to. But
well,
what you're looking about, how are you going to measure whether there's any, what the impact of this is and whether they will continue to have confidence to grow.
Yeah, it's not just about what they say to me. The
Yeah,
Federation
sure,
for Small
yeah.
Businesses have said that we accepted one of their recommendations that they've been recommending to government for some time, which is to increase the threshold at which small businesses pay national insurance, and they welcome the fact that we listened to that and did that. Of course, we look at evidence on business formation, on vacancies in the economy, the number of businesses operating in the economy. We look at all of those things as you would expect.
Yeah. And are there any things that you're looking at to see particularly do well, and ones things that would worry you as Chancellor in that, well, I mean across the sector, but particularly as we're talking about these small and medium-sized businesses, that if you saw like more businesses folding or there was freezes on recruitment, would there be alarm bells that would ring for you as Chancellor from where you're sitting?
Well, obviously, we look at all of the labour market data. At the moment, it's showing that despite some of the concerns that have been raised, wages are rising at around twice the rate of inflation. Many people said that wages would fall or wage growth would collapse because of the changes to national insurance. Well, actually, for the last few months, wages have been rising faster than prices, around twice as high in the most recent data. Vacancies have stabilised at a historically high level in the economy, which shows that we need to do more to help people back to work.
No, you mean vacancies are not a high level, you mean vacancies have stabilised at a low level?
No, at quite a high level compared to the historic averages, which again gives confidence that businesses do want to carry on hiring, and in fact it's about redoubling our efforts to ensure that those people who are not in work today are supported to get back to work, because vacancies at about 700, 800,000 are at a historically high level, and businesses still complain about the challenges that they have in recruiting the people they need to do the jobs, and we need to help businesses to be able to access the skills they need.
Misunderstood. Mr McFarlane.
Chair, if I may, just to your series of questions, you started with the NICS changes and then obviously what we look at. I mean, in terms of our discussions with the OBR and what they look at, and I think they explained this to the committee yesterday, I mean, they highlighted some of the uncertainties around their judgment on that measure in their budget forecast, and they therefore have looked at it since, in particular at survey data. And I think what they've said at this forecast is the survey data is genuinely mixed. I mean, we had an exchange on it in the hearing after the budget. The difficult judgments between impacts on prices, on employment, on wages, and so on. And they haven't seen fit in the survey data they have looked at to revise any of their judgments since the budget. So in terms of what you are seeing from that measure, there is no change in the underlying forecast. It is the story around the forecast of the short-term productivity data being about 1/3 of the lower growth this year, and then cyclical factors, including higher bond yields that we're all facing, higher energy prices that we're all facing.
Which we played out, as you say, yesterday with the OBR. Thank you for that, Mr McFarlane. John Den MP.
Thank you, Chancellor. Could I turn to the issue of tariffs? Last time before you before this committee, I think it was on the 6th of November, I think there was some uncertainty at that point over the complexion of the new administration in the US. But at that meeting, you said we will make strong representations about the importance of free and open trade, not just between ourselves and the United States, but globally. Could you update us on how effective you think those your representations have been?
Well, I spoke to my opposite number, the Treasury Secretary Scott Bessent, in his first week in office. I've joined the G7 meetings since then, and spoke to him again on Monday this week. And the Business and Trade Secretary, Johnny Reynolds, is meeting regularly with his opposite number, and also the US Trade Representative as well. And those talks are ongoing. As I said before, and I will happily reiterate it today, I do believe in free trade. The UK has balanced trade with the United States. When our Prime Minister, Keir Starmer, was in Washington meeting President Trump just a few weeks ago, they agreed to start a rapid dialogue on an economic agreement. That work is ongoing at the moment, but we do not want to see trade barriers go up. Indeed, we want to see trade barriers fall, not just with the United States, but also with our nearest neighbours and trading partners in the European Union, with India and other countries around the world.
But I think it's fair to say, and obviously you're not the arbiter of the US's tariff trade policy, the consequences of what's already been announced are quite significant. What concerns the committee, I think, is that the OBR world economy forecast, based on the IMF forecast, doesn't incorporate any of the changes. Now, you have maintained your headroom, and my colleagues will ask you in more detail about that, at 9.93 billion, exactly the same as in October. It's 50% higher than the most recent of your predecessors, Jeremy Hunt. But against an average over the last 15 years, it's a very, very modest one. Professor Miles told us yesterday from the OBR that if we have the sorts of tariffs that have already been announced on cars and they're maintained, it'll knock out all the headroom. And one of the other things you said to me into this committee on the 6th of November is that you wouldn't be coming back for any more tax increases. Can you confirm to the committee today that you won't be raising taxes?
There's a lot of questions to
answer the last one first.
I said in the budget last year that it was a once-in-a-parliament budget to wipe the slate clean after the economic mismanagement of the previous administration. We made a number of difficult decisions around taxation. We increased taxes on the wealthiest in our country, and we also increased, as we've already discussed, taxes on business. I think that was the right balance to restore stability to our public finances.
So you can rule out further tax increases?
I'm not going to write another 4 years' worth of budgets. That would not be responsible, but I can ensure the committee that I will not need to repeat a budget on that scale, because we have now wiped the slate clean and put our public finances on a firm footing. And indeed, in the spending review in 2 and a bit months' time, on June the 11th, we're going to be setting spending for departments, capital and day-to-day spending for the next few years, and public services now need to live within the limits that we've set out.
Obviously, the consequences of the cross-party consensus on spending 400 billion on furlough and other ameliorations of COVID have had a massive scarring effect on the economy. Can we turn to what you might actually do then with respect to mitigations of where the tariffs seem to be going? There seems to be a spectrum of responses, from perhaps a more muscular response from Canada and the EU. Now, the indications are, from what the Prime Minister said at Prime Minister's question time and what you have said, is that the UK is adopting quite a delicate sort of diplomacy-led approach in the context of a trade agreement. Is there anything more you'd like to say? Because obviously, if we're not going to retaliate as strongly as the EU and Canada, there are fiscal implications for that.
First of all, let's see how other countries and other trading blocs respond. I spoke to Commissioner Valdis Dombrovskis just before I came to give evidence at the committee today, and we are discussing with other countries and with the EU about the appropriate response to whatever announcements are made later today. But the Prime Minister has been really clear, the government has been really clear that we're going to approach this in a clear-headed way and always represent the national interest. It's why myself and the Business and Trade Secretary met with big UK exporters this morning. They don't want government to rush into any response, because the prize on offer is an economic agreement. We don't want to do anything that undermines that. We don't want to get ahead of ourselves. We are still in discussions with our counterparts in the United States, and the focus is not on, and I know that you wouldn't suggest we did do this, I absolutely accept that, but we don't want to be posturing here. The prize on offer is a good economic agreement between us and the United States. We won't do anything to put that in jeopardy. We're not going to rush into action to, get a quick headline. We are focused on doing what is right for our country, for businesses operating here and working people here.
Thank you, Chancellor, and I certainly recognise the complexity and the trade-offs that you're inevitably having to deal with. Could I ask you about the sort of mechanics of how trade and tariffs are calibrated? I mean, the OBR makes assertions around the severity of the response and what impact that would have. Does the Treasury do its own impact assessment, if you like, of the tariffs, or is it reliant on the OBR? I mean, obviously you have an iterative journey through the lead up to fiscal offence with the OBR, but how does it work on tariffs and trade with the US?
I'm not going to disagree with their analysis.
Yeah.
Obviously, we're looking ourselves and with the Department for Business and Trade at a whole range of possible scenarios, preparing for all different eventualities. I think what the OBR are really clear about is that the biggest impact comes from global tariffs, not UK-specific ones. The next biggest impact on the economy, both on growth and inflation, comes from retaliation. And actually, the specific tariffs on the UK are less relevant to the growth and inflation impacts than the global picture, because we are an open trading economy, and depressed demand from overseas because of tariffs, higher inflation overseas because of tariffs has a direct impact on the UK, whether we are subject to tariffs or not. I think that is really important to understand, because even if we are able to secure an economic agreement with the United States, which we very much want to secure and working hard to secure that, even if that is possible, doesn't mean that somehow we are therefore out of the woods and not impacted by tariffs. So we don't just want to see an agreement between the UK and the US. We want to see free trade, fair trade continue. But at the same time, I do recognise some of the concerns that the United States has. I mean, their concerns are about global trade imbalances. And I do understand those. What I would argue, and what we have argued, is that the UK is not the cause of those problems. We have balanced trading goods with the United States, and so it would not be the right policy to increase tariffs on us. But of course, we are preparing for all different eventualities. I'll just also say this, because trade discussions aren't just something that happens with the US. There are other countries in the world where we want to improve our trading relationships, and that's why as a government we're working really hard on improving trading relationships with India and the Gulf countries. We're hosting in London next week economic and financial dialogue with India, an important growth sector for the UK, and we've got the summit on the 18th of May with the European Union, because we want to make it easier to trade there too.
Could I just ask just one final question when you think about America, specifically in relationship with America? Some of the instincts and language and indeed follow-through policies of the Trump administration with respect to global financial regulatory fragmentation. What work is going on in your teams around financial services to ensure that we are putting the case for strong global standards in regulation?
I think that is also a really important point, and I think you had the FCA, maybe the PRA in, the FCA last week, and I'm sure that I'm sure that Sam Woods and Governor Andrew Bailey will also be in to give evidence. We are very much a supporter of high global standards. We also recognise that we operate in an internationally competitive environment, which is why at the end of last year, the PRA announced that we're going to postpone the implementation of Basel 3.1 for a year whilst we wait to see what the new US administration do, because we need those global standards. The UK also needs to be competitive in a whole range of sectors, including financial services.
The committee visited the Bank of England and met with the governor and the deputy governors a few months ago. But just to be clear, do you see any particular threat from the US administration to the fragmentation of global financial regulation?
No, I certainly wouldn't put it like that. But the US administration are focused very clearly on improving the competitiveness of their economy, and as a global trading economy and one with a big financial services sector, we need to make sure that we remain competitive on that world stage if we're going to secure jobs and investment into UK financial services.
What do you see as being the key practical steps that our regulators can take? You talk about the deferral of the implementation of Basel 3.1 to align with what other jurisdictions are doing. This has been talked about for a very long time. and it's quite unclear. You know, we folded the PSR into the FCA, but what tangibly do you think will actually make a meaningful difference to that sector?
Yeah. So in my Mansion House speech last November, which is, I guess...
I think we were all at, actually. So.
Oh, yes.
I need to repeat it.
Last November, I set out a range of things to make financial services in the UK more competitive. So the updated remit letters to the regulators, where we asked them to focus on regulating for growth, not just for investment.
What does that produce? Writing the letters.
Yeah.
I mean, I've been there. I've done that. And the point is, what the industry wants to know is what practical steps are you holding their feet to the fire?
Yeah, so let me give you a couple of examples. We asked all of the regulators, including the financial services ones, to come back with specific ideas that they could pursue to make the sector more competitive. So the FCA, for example, suggested increasing the limit on contactless payments, also changing some of the rules around mortgage eligibility, which can help, alongside the building of more homes, get more people on the housing ladder. The PRA, as well as the Basel 3.1 stuff, which was widely welcomed by business, also creating a concierge service to help inward investment into financial services in the UK. Later this year, we're going to be launching Pisces on the London Stock Exchange, which is an intermittent trading system, so companies that haven't listed can list for a period of time to raise money on public markets. The London Stock Exchange and the FCA have done a lot of work to make London a more attractive place to list, and we're working with a number of businesses that are looking to IPO in London at the moment. So I do think on financial services we've got a good story to tell. The capital markets reform, particularly what we're doing in terms of pensions, is significant. The consolidation of pensions, both local government and DC schemes, are about ensuring there's more money to invest in UK businesses.
When do you think you'll see the fruits of these labours? When do you think the country will see the fruits of these labours?
Well, some of this is coming in this year. So
the technical things are coming in, but when do you think that the average person in our constituencies will feel the benefit?
Well, if you're a saver into a pension scheme, you should see the benefit with better returns on your pension savings. If you are saving into a local government pension scheme, that money should work better for your local community. So, these changes will have an impact on people's lives. And financial services is such an important part of the UK economy. I'm an MP in Leeds. Financial and business services, I think, are the biggest single private sector employer in my city. So this is something not just about the City of London and Canary Wharf. This is about financial services centres all over the UK. And just a couple of weeks ago, I was at Bank of New York at their new Manchester offices, where they're going to be employing 2,500 people. It's one of their 6 global hubs. So this is a real UK success story.
Real jobs as well as all of the highfalutin stuff.
It's about two things. It is about good jobs, paying decent wages, and the jobs in this sector are highly competitive in terms of their wages, and increasingly they're distributed across the UK. But it is also about the efficient allocation of capital to fast-growing sectors. And I want, British startups and scale-ups, like some of the ones we've already mentioned today in this session, to have access to finance to stay in the UK. Because I spoke to a scale-up business recently, and they say every time that we raise money to grow, we become a little bit more American, because most of their funding comes from the US. Well, I want, as businesses, as they grow, to stay in the UK, for those returns to come to the UK, for the jobs to be in the UK, and that's why this pensions reform is so crucial, to unlock that long-term patient capital to help businesses to grow and stay in Britain.
Well, thank you. Certainly passion there, Chancellor. Bobby Dean, MP.
Thank you. Chancellor, you've spoken obviously about your commitment to the fiscal rules, and I think you've spoken about the stability rule in particular. The stability rule obviously doesn't specify how much surplus you should have. Dr. Salaheen yesterday told us that the markets aren't really looking for that either. But it seems like a decision was taken to try and match the surplus that you achieved last time, the 9.9 billion figure. I'm assuming that wasn't a coincidence. If it wasn't, could you explain to us why you decided to target that figure?
So we did want to have about the same amount of headroom. It was accident rather than design that it was exactly the same amount of headroom. I don't want to take more credit than Even Will McFarlane couldn't engineer that.
That really is hard to believe.
No, honestly, because we couldn't. We couldn't.
It's within 2
Even
million.
if it was, yeah, I know. But I mean, you know, I don't have those superpowers. The OBR look at all the indirect effects. They look at how policies interact, and we couldn't, even if we'd have wanted to, engineer an exact amount of headroom. We were hoping for about the same. 2 decimal points was beyond what I had anticipated.
Well, I mean, we're going to come on to welfare reforms in more detail later, but that feels a little bit undermined by having a whole package of reforms announced and then this extra 500 million coming in late in the day. That feels like it was done as a balancing figure. Are you disputing that?
So the final package, when the Secretary of State Liz Kendall set out the welfare reforms to Parliament the week before the spring statement, she said that it would be a package of measures worth around £5 billion, but that the final costings would be done by the OBR as is right and proper. We were going through a series of iterations with the OBR, and the exact measures changed a number of times throughout the process as we refined the final package. Some changes were made late in the day. That is not unprecedented. I'm sure that Will can say a little bit about that. But as the OBR say, I think in their sort of executive summary, they were very small changes in the sort of scheme of the total package. The OBR have also been really clear that all of their assumptions are based on nobody who's not currently in work moving into work.
We're going to go into that
look
more
at that
detail,
over the
yeah.
summer.
Okay, I'm going to have to accept for a moment that we did accidentally end up within 2 million. But you did say you wanted to target round about the same figure. Can you explain your reasoning for that?
Well, because that's the figure that we chose in the budget last year. We do recognise that the headroom is necessary in an uncertain world. We didn't want to see that erode. There were some people who were saying, don't worry about the headroom. You can address it in the autumn. I felt that was the wrong decision because we have been very clear, both in our manifesto and our election campaign, and since we came into office, that fiscal stability is so important. I mean, all of our constituents saw what happened when the previous government lost control of the public finances. So I did want to ensure that our economy remains on a stable footing, and the way to show that is that even in difficult with the headwinds that we've faced, we are able to preserve about the same amount of headroom.
I guess others would also say that you set that figure last time and it had to be adjusted 6 months later. And you've heard from Mr. Glenn earlier that the tariff situation may already have eliminated that headroom again this time. So there is big question marks over whether that is a sufficient level of headroom in these volatile times. Is it a deliberate strategy by you to address that every 6 months, or are you hopeful that this time this headroom will stay intact?
There's a balancing act when you're doing a spring statement or a budget around what you want to do on taxes, on spending and on headroom. Everything else being equal, would we like more headroom? Of course we would. How do you achieve more headroom? Lower spending or more taxes? And I felt that we got the balance right between the spending projections that we've set out, the tax policy and the headroom. Because everyone would like more headroom, but no one wants more taxes and no one wants spending to be lower. So I think we've got the balance about right. But I do accept that it is a balance between those 3 different moving parts.
I can see Mr. McFarlane's keen to come in, so please let him come in. I'll come back.
Just to some of your questions, Mr. Dean, to add to what the Chancellor is saying, just on your first one around precisely the same, I mean, just to endorse what the Chancellor is saying, at that stage of the forecast process, we are still dealing, although the baseline forecast is settled by the OBR, we're still dealing with a number of variables, final costings, the behavioural and indirect effects of those measures, and indeed, as we QA everything, regrettably some errors. Sometimes in these significant processes. So aiming for within 100 million is not something we ever tell ministers throughout the history of the OBR, including former Treasury ministers here, that we are able to do. And just to sort of support what the Chancellor was saying there, that does, and the Chancellor addressed the point that some costings were changed quite late in this process. As the Chancellor said, that's not unprecedented. It's happened several times It is not what we set out to do, but sometimes policy packages are moving late, including because the OBR are making changes to costings. They're independently setting behavioural consequences of the policies that we give to them, and so that has happened in the past. In terms of getting back to broadly the same level as the Chancellor said was the government's objective, the OBR have some analysis on this. We did see a deterioration, principally driven by volatility in global bond yields, which the UK also experienced. It's pretty atypical. It's not without precedent, but it's pretty atypical for a statement in response to that to get back all of the headroom on fiscal rule. As the OBR said, we did do that on the current budget. We almost did that in large part on public sector net borrowing. And that is pretty atypical, but a plan was set in the budget, a very balanced package of difficult tax decisions, a spending envelope for the spending review forthcoming, and the government decided to stick to that plan, including broadly the same headroom, precisely the same headroom. And so that was the sort of decision taken, which the OBR explained. The OBR also explained on headroom, and as Mr. Glenn I think referred to earlier, in the overall history since the OBR has been created, average headroom has been higher. That's driven a lot, as the OBR set out, by very much larger headroom for different fiscal rules in the early part of the OBR. Actually, since 2022, the average is about 10 billion. I mean, that's obviously the UK has been facing difficult circumstances since then, but that's where we currently are.
There's a useful graph showing that.
Thank
you, Mr. Dean.
Yeah, just very final question on this one then. Are you at all concerned that we might have set a precedent though in having arrived at the same figure, and the fiscal rules are already pretty sort of hard, you know, they're ironclad, you can't breach them, and now you've got the surplus figure anchored in people's minds. If we end up at 8 billion surplus next time, is that going to set hairs running? Do you worry about that?
I think we'll approach the autumn budget with a sort of and think all that through. I was pleased we were able to achieve about the same amount of headroom this time. As I said, everything being equal, of course, it'd be nice to have more headroom, but that would require decisions that, as a government, we weren't willing to take about having more taxes or less spending. So I think that the balance is about right. I would just say, not only are we meeting the fiscal rules with 9.9 billion pounds of headroom, we do meet the fiscal rule, the stability rule, and actually the investment rule 2 years early, which I think should give us some confidence.
Okay, thank you, Chancellor.
Thank you.
One of the challenges we've been puzzling over is the headroom points that Mr. Dean has raised, and obviously we're going to get onto the details of the welfare changes, but annually managed expenditure is an easier budget to manage in year, obviously for the obvious reasons. Is there, if headroom were to be wiped out, does that mean there's more risks to that budget than any other, given that the spending review will have taken place in the autumn? No, we can't. Obviously, not expecting you to make a budget announcement here, but realistically, that is the budget that's flexible.
I would just say that the risks around the forecast, there are upside and downside.
Yeah, but I'm just thinking, when the day when tariffs are going to be announced, well, we've already had the tariffs announced in the UK. There's big tariff announcements expected. As the OBR's indicated, that's a big impact. We know that. I mean, there are lots of shocks that every government has to deal with. This is a particular one right now, and it's a particularly big one. But there is that risk, isn't there? I mean, annually managed, once you've done a spending review, you've got very little, and you've talked about taxes, you've talked about the spending review. Isn't much else, not where else you can go to get changes.
No, but we're not just passive as a government, waiting for things to happen. We also have an agenda to grow the economy, and since the budget, we have introduced the Planning and Infrastructure Bill, which has successfully got through its second reading. That's legislation.
But I don't think anyone around the table would disagree with growing the economy. I think everyone would have a part.
No, but what I'm saying, Chair, is that the Office of Budget Responsibility have already scored the National Policy Planning Framework. That's a small part of the growth reforms that we are bringing forward as a government. They haven't scored, rightly so, anything to do with the Planning and Infrastructure Bill, because at the stage of the forecast, it's still a bill. It's still a bill at the moment.
Nor the Employment Rights Bill, to be fair.
No, indeed, and the Employment Rights Bill put more money in people's pockets, so there are upsides and downsides there as well. But, you know, there are things, the government are not passive. We are doing a number of things, the capital markets reform, which I think everybody in this room recognises, because, you know, some of it draws on what the previous government did, but will be good for our economy in keeping businesses and keeping jobs in Britain. The planning and infrastructure bill will make it easier to build in Britain. Some people don't like that, but this government are pursuing those policies because it can help grow the economy and bring in the money to the public finances. So, of course, there are risks on the downside, and we can just focus on those, but actually, as a government, we're also focusing on doing those things that will actually grow the economy and improve our public finances at the same time.
An optimistic response. Thanks very much, Chancellor. John Grady.
Thank you very much, Megan. Good afternoon, Chancellor. If we look at chart 7.2 on page 144 of the OBR's report, obviously there's a missing Chancellor of the Exchequer there in the form of Kwasi Kwarteng, but you inherited a fairly...
It'd be nice to block him out.
Well, I'm afraid we can't, but we inherited a fairly small headroom. If you moved rapidly to increase the headroom, as opposed to taking the trade-offs that you have taken, what would that mean for tax rises in our already stretched public services? I'm mindful that there's a vote, so I suspect Dame Meg would like us both to be quick.
Look, I mean, you know, if we go back to the £30 billion of headroom, that would require £20 billion of tax increases. Actually, it would probably require more than £20 billion of tax increases, because if you do £20 billion of tax increases, the OBR may well assume that the economy therefore weakens, so you'd need to do even more than that. Or you would need to reverse the extra money that we've put into the NHS since the general election, the £25 billion that we put in. And as a result, the waiting lists, well, I'm afraid in Scotland actually waiting lists aren't coming down, but that's the fault of the SNP rather than this government. But we wouldn't see the falls in the hospital waiting lists. So, you know, I think we have got the balance right. I do accept that, you know, it is lower headroom than we had in, you know, the earlier years of the OBR, but to rebuild it that rapidly would require changes on tax and on spending that, as a government, we would not be willing to make.
Now, another suggestion that people make, Chancellor, is we should increase borrowing. In your view, would a material increase in borrowing and a change in your fiscal rules, which would have to take place, lead to a significant increase in the cost of government borrowing?
Well, there have been numerous impacts if we increase borrowing and weren't able to deliver the economic and fiscal stability. And the first would mean that the national debt, which is already almost the size of our economy, would grow larger still, and that would increase the servicing costs of that debt, which are already £105.3 billion, I think, this year, more than we spend on the Home Office, MOJ and Defence. I would rather spend some of that £105 billion on schools and hospitals, on transport infrastructure, or indeed bringing taxes down on working people. So I do want to reduce those debt servicing costs. But also, if we were to fail to meet our fiscal rules, fail to provide the economic stability that our country needs, I don't think the Bank of England would have the same confidence to cut interest rates that they have the last few months. Interest rates down 3 times in just 9 months, and that would mean higher borrowing costs for all of our constituents, whether those are families with mortgages or businesses borrowing to grow their business. So, I want to bring down the levels of borrowing. I want to bring down the levels of debt, and that's what the OBR confirmed that we are doing as a government.
Okay, and so if we're out in Bramley or Broomhouse in my seat, what you'd say is higher mortgage rates for people, higher cost of finance for big investments in energy infrastructure and so on, and lower economic growth. That's what would eventuate from greater.
And I think that, constituents of yours in Glasgow and mine in Leeds West and Pudsey, actually don't need the OBR or their MP to tell them that, because it's what happened a few years ago, where the cost of borrowing for businesses and families went through the roof. Uncertainty was all around us, and it constrained the ability of our economy to grow. We've returned stability to the economy. That is the platform on which we can grow the economy.
Now, another lever that's suggested is tax. So, first suggestion is a wealth tax, which would take time and obviously be complicated to implement. What's the Treasury's thoughts on a wealth tax at the minute?
I'd just say on that, in the budget last year, we increased sort of 2 sort of broad types of tax. We increased national insurance on business, which we've already discussed. We also increased taxes on the most wealthy. The reforms to the non-dom tax status will bring in £12 billion during the course of this Parliament. VAT on private schools would bring in £9 billion during the course of this Parliament. The energy profits levy on the large profits, the energy companies making £2.3 billion. The higher rate additional dwelling on stamp duty land tax, £1.2 billion. And the thing that these sort of taxes, or the capital gains tax increase, £8.9 billion. Inheritance tax changes about just over £5 billion. The point is these taxes, by their nature, fall on more wealthy people. And so my argument would be that we did already increase significantly taxes on the wealthiest in the budget last year. Now the focus has got to be on growing the economy and reform of public services, as well as spending wisely the additional investment, including the £25 billion into the NHS in this Parliament.
And another tax suggestion people make is on council tax and revaluation or additional bans. See that from the IFS and others. What are the current Treasury thinking on that?
Well, look, some councils wanted to significantly increase their council tax this month, and we have resisted calls from a number of councils, including Windsor and Maidenhead and Slough, who wanted to increase their council tax significantly, because we do recognise the ongoing pressures on living standards and the cost of living crisis that people have gone through. So, we want taxes on working people to be as low as possible. It's why, despite the difficult decisions in the budget last year, working people in their pay slips won't be paying any additional tax.
And any thoughts on more fundamental reform, or is that for another day?
That's not something that we're looking at the moment.
And final question from me. The real way out of this is economic growth, is it not? And that's what we need much, much more of. Are you satisfied that the regulators and others in Britain are moving fast enough to deregulate to get that growth that we need, or are you wanting greater and faster progress?
I think that all the officials in the Treasury meet me know that I want to go further and faster on pretty much everything we're doing, including on the regulation agenda. And we've taken out 2 regulators already. The Health Secretary, Wes Streeting, is abolishing the biggest quangle in the world, NHS England, and we've set that target of a 25% reduction in the admin costs of regulation during the course of this Parliament. We are also trying to streamline, and Steve Reed at DEFRA is leading this work on the environmental regulations, which hold up so much of the investment in infrastructure, particularly in housing, that we need to see. So, look, it's right that we have regulations to protect citizens, to protect consumers, but I do think that the balance has shifted too far, and regulation now too often stops things from happening rather than enabling things to happen. If we want to build the homes, if we want the energy security, particularly in the wake of Russia's invasion of Ukraine, if we want better transport links without the excessive costs, for example, that we saw with HS2, then we need to make it easier to build, and we need to reform the regulatory system. And that's what the Planning and Infrastructure Bill is setting out to do. It's also what our drive on regulation is determined to do.
Okay, thank you, Chancellor, and thank you, Dame Meg.
Thank you very much, Mr Grady. I think it's Rachel Blake MP.
Thank you very much, Chair. Chancellor, that was a nice segue into talking more about policy measures. So I wanted to ask some questions about house building and the forecast.
Yeah.
So we had some fascinating evidence yesterday from Professor Miles from the OBR, where I pushed him on his methodology for the forecast, the 0.2% growth, and also the number of homes he anticipates. He said he spoke to the sector. He said he did some work on land capacity and also looked at construction capacity.
Yeah.
And what came across from his evidence was that construction sector capacity would really be the rate limiting factor. So how concerned are you about the ability for workforce to step up to meet these objectives?
Yeah, look, I absolutely accept those constraints, which is why with Bridget Phillipson, the Education Secretary, we announced this increase in the number of places on construction courses, a combination of apprenticeships, boot camps, the technical excellence colleges, and also the incentives for people wanting to move into the FE sector to train up the next generation of plumbers and electricians and bricklayers, etc. So we are very focused on that. It's also why we've relaxed some of the requirements for apprenticeship programs to actually get people through these courses, which is what the construction industry has been crying out for.
And do you anticipate the construction sector being able to step into that space, given that we've still got some time to wait to see the developments come forward?
Yeah, so one of the reasons why we brought forward from the spending review the £2 billion extra for the affordable homes programme is because we know that the construction sector, house building sector, wants some stability and some certainty that they can do deals and make commitments around building. So, not living hand to mouth, one deal to the next, knowing that they can plan over a period of time, which is why we're doing a 3-year spending review for day-to-day spending and slightly longer for capital spending, and why we pre-announced some of the money for the affordable homes programme to make sure that those projects have the confidence to continue. And that pipeline of projects, which is so important, and that consistency of funding is something that gives the industry confidence to take on apprentices and train people up. It's also something that gives people confidence to enrol on those courses, knowing that there's going to be a pipeline of work there and that their qualification is going to mean meaningful work paying a decent wage for years to come.
Thanks. And in the discussion yesterday, we talked about further measures that they might score. So we discussed development corporations within planning infrastructure bill.
Yes.
They've obviously given the target that they said that they think that the target will only be 1.3 million. So what more needs to be done in order to make sure that that target is met, given the outline of what they think means that we won't meet the target at the moment?
Yes, so they now forecast that the house building will be at its highest level for 40 years. That is very welcome. But, going back to sort of further and faster mantra, we want to do more to get those houses built. In your constituency, cities in London and Westminster, I try to imagine what the average house price is. So we do need to build more homes, particularly in parts of the country that are growing rapidly and where the housing demand is greatest. So that's why we are doing more through the planning and infrastructure bill. That's also why we are doing more to train people up, because, as I said, I think in answer to a previous question, it's not just the homes, important as they are, both social affordable homes and homes to buy in the private sector. It's also creating really good jobs, particularly for our young people, and we want to achieve both of those through our planning reforms.
Thank you, Chancellor. There was one more element that we discussed with Professor Miles, which was about the factors of rents and the cost of rent, particularly in London, and how that could be factored into our house building process. And one of the questions that I wanted to put to him was about the impact of more affordable housing and what that could do to forecast. What consideration have you given to the chances of changes in those growth forecasts once a determination has been made about the tenure of those homes?
It would obviously be helpful for people's living standards if a lower proportion of their wages were spent on rents. It would also have quite a big fiscal impact on councils. So you gave me the number recently that your local authority spends £95 million on temporary accommodation. If we were actually building the social and affordable homes that our country needs and councils like Westminster need, then we could reduce those sorts of costs of failure, give people more secure accommodation, which is good for them and their family and for all of their life chances, whilst also easing some of the pressure on public finances, in this case of local authority finances, which are under huge pressure.
Thank you very much,
Siobhan McDonough.
Thank you. Really, the house building programme and the planning reforms have brought a bit of hope and optimism in quite a difficult set of circumstances in the OBR report. But can I urge you to go faster, Chancellor?
Yes.
Because I was delighted to hear from the Prime Minister in the run-up to the general election that you were tackling the issue of building on the green belt. Mm-hmm. But I think there's much further to go. Mm-hmm. And I wondered if you've looked at the suggestions that there is about 1 million homes that could be built close to outer London train stations. which would not only give you more growth, greater growth, homes in places where people wanted to live, and I want to give you my word of the day, it would give, obviously, London greater agglomeration, and so would assist you in other ways in seeing jobs with better salaries and people with more spending power, and would be greener because people would be travelling less far. They wouldn't be going to Reading quite as much.
What a shame.
Yes, which would be a shame in itself. But it would allow people to live closer to where they work, spend less on transport costs, and it seems a win-win all round. So I'm just very keen that maybe you could persuade your colleagues in housing and local government to go that bit further.
Yeah. Well, thank you very much for that question.
The Chancellor promises another department, doesn't he? She's still got to fund it.
So on the issue around the green belt, we are very keen on those sort of areas that we call grey belt to have more development. We're also in the next few months going to announce the outcome of the review that the Deputy Prime Minister commissioned on new towns, and a number of suggestions or proposals have come forward for brand new towns, but also the expansion of existing towns and cities. So there's massive opportunities there to build, whole new places for people to live. We're also doing a huge piece of work around the Oxford-Cambridge corridor with new housing, exactly as you say, alongside the train stations on that route, because we need to make sure that people then can access the good jobs paying decent wages. And in your point around building around train stations is really, really important. And we are working very closely with Network Rail. We've come to an agreement with Network Rail about releasing land near train stations for exactly this purpose. And I was with Mayor Andy Burnham recently at Stockport, where they used a Merrill Development Corporation to unlock land, some of it Network Rail, some of it private, some of it local authority around the train station to build new homes. It's just 8 minutes on the train to Manchester city centre. Obviously the rent and the house prices, the flat prices are a lot lower, but you have that access to the good jobs in the city centre, and exactly that point you're making around agglomeration. And we can achieve that in other cities as well, including London, including in my own city of Leeds, and you can have sustainable travel into work. You don't have such a need to build new infrastructure, which is obviously an expensive part of any new development, if the infrastructure, particularly the transport infrastructure, is already there.
Thank you, Chancellor.
Can I ask another question?
Quickly.
Thank you. The 2 billion identified for socially owned home was gratefully received, but it will build only 18,000. Yeah. That'll be of enormous impact to the 18,000 families who have that opportunity, but still it's only a tiny number in comparison to those that we need. And social housing obtained through planning gain is one of the most expensive ways in the world to get your social homes. Have you thought about any broader ideas how we can increase the amount of affordable homes?
So that £2 billion is a sort of a down payment on the spending review. We wanted to announce it early, not because that's the total sum of the money we're going to make available in the spending review, but because, as I said to Rachel Blake, we wanted to give the sector certainty that the money was going to be there into the new financial year, and we're going to set out a new programme at the spending review. But look, I know that you've got strong ideas in this area, and you should definitely feed them through to myself and also to MHCLG, both Matthew Pennycook and also the Deputy Prime Minister.
With our sister committee, we'll be examining that in due course. Moving swiftly on to Bobby Dean MP.
Yeah, moving on to the welfare reforms, but I'd like to ask just a clarifying question about timelines for us. I'm not sure if it's Ms Tinsley or Mr McFarlane might be able to help me with this, about the dates that the OBR say that they received the packages from the Treasury. So we've got, I think, 5th of March, 12th of March was the final package, and then 19th of March was the final package. Could you tell us at what point the welfare reforms, as the package we've seen them are now, were given to the OBR? So I wasn't sure who the best person
I
to
can
answer
start,
was.
and Ms Tinsley will take over on some of the detail of this. So those are the dates when we submitted iterative packages to the OBR, which I think they talked to you about yesterday, and I think they've set out in their forecast timetable. I think the point, as you've referred to as the final package, which Ms Tinsley might want to expand on, is there were changes made to the parameters of some of the policies at that point, but the parameters of the policy still consistent with the Green Paper and still consistent with the kind of basic policies sent on the prior date in terms of the kind of final package announced by the Secretary of State for Work and Pensions, albeit that was after the OBR's sort of final deadline for costing certification. Hence they've set out in their executive summary that two measures that were changed, the parameters were changed, were not certified, as I talked about earlier. But Louise may want to add.
Thank you. So I would add that it is the usual process that it is an iterative process. Yeah. So there are deadlines by which there are submissions made, but conversations between Treasury, the OBR, and in this case the Department of Work and Pensions were ongoing as they were sort of challenging costings or challenging assumptions. So although those deadlines are the specific deadlines, there are points at which things are submitted and then conversations will continue as is part of the usual iterative process.
Yeah, I think the bit we're trying to get clarity on is obviously Secretary of State for Department of Work and Pensions, I think, addressed the House on the 18th of March. And so the changes that went into the package on 19th of March, was that when the variance from what she said at the dispatch box to what we saw in the spring statement came in, or?
What she said in her statement was not contradicted by anything that was given to the Office of Budget Responsibility. So, it
is within the parameters.
Yeah, it was consistent both with the Green Paper and the Secretary of State's statement to the House of Commons.
Okay. Well, let's go on to the substance of it. So, when we were talking to the economists yesterday, they seemed to sort of come to the conclusion that the welfare reforms were driven by a desire to balance the books more than get people into work. Now, I know that's not what the government's view is, that it is about getting people into work. But their view was that while they accept there's issues with the welfare state that needs reform, and that there will be plenty of people that do need that help to get into work, they don't think it's anything like the numbers of people that stand to lose out from these reforms. So just would first of all, Chancellor, like to get your response to that.
So I don't think anyone thinks that the current system of welfare, and particularly around sickness and disability benefits, is actually working today. Not working for the people in receipt of those benefits, not working in terms of ensuring we've got a decent participation rate in the economy, and not working in terms of delivering value for money for taxpayers. 1 in 10 people now on sickness and disability benefits. We've got 1 in 8 young people not in education, employment or training. We've got 1,000 people every day going on to personal independence payments. We're one of the few countries that has a lower participation rate in the labour market than we did before the pandemic. And I guess I sort of have 3 basic principles when it comes to welfare. First of all, there must always be support for those who most need it. The welfare state must always be there for them. Second, we need a welfare system that incentivises and encourages everybody who can work to work. And third, we need a system that is sustainable for the long term. And at the moment, I don't think the welfare state does any of those 3 things well enough, which is why we are reforming it to make it work for all of those people, but particularly with a focus on helping people back to work, which is why we've announced I think possibly the biggest ever package of measures to help people back into work with guaranteed, personalised and tailored support for them.
So I think there is consensus on that. Change does need to happen. But I guess it's the timing and the scale that people are questioning. You commissioned Sir Charlie Mayfield to do a review into this. The spring statement measures come ahead of that. So that feels, I'm sure you'll come to address that. And also the main driver of the saving seems to be restricting eligibility for PIP, personal independence payments. Now, 800,000 people could be set to lose out from that. Around a third of all PIP claimants are in work anyway, but presumably if you're going to be tightening eligibility for PIP, that's going to target the sorts of people that are more ready for work already. So it doesn't seem like there's a huge proportion of people that are going to get back into work as a result of that measure. So could you explain that for us, please?
First of all, the work that Charlie Mayfield's doing, really important work, is about helping keep people in the labour market rather than supporting people who are not in the labour market. So they're sort of a bit different, but Charlie Mayfield's doing a really important piece of work for us, and we do know that the best thing we can do is to help people stay in work, because once they drop out, it is much harder to get people back into work, which is why I've asked Charlie to do that piece of work for us. You're right that the reforms around PIP are around the eligibility, so you'll need to get a minimum of 4 points in one category to get onto personal independence payments. Since the pandemic, the cost of health and disability benefits has gone up by £20 billion, and left unchecked, by the end of this Parliament, it will be another £20 billion a year on sickness and disability benefits. The changes we're making will still see the amount spent on these benefits rise substantially by £16 billion, so a little bit less than the rise that's already in
the
place.
stated purpose of the reforms is to get more people back into work.
Yeah.
Many PIP claimants are already in work, and others probably are unable to work permanently. So of the 800,000 that look like they're set to lose out on PIP claimants going forward, saved by the bell. Can I complete the question? Yeah, so the 800,000 that are set to lose out, what proportion of those would you expect to get back into work?
Well, and I think we'll actually have to pause for the vote.
You've got a lot of time to think about the answer.
Yeah, exactly. Order. We will return as soon as we can, and I think if I propose that when we get going again, once we've got Ms Yang, Mr Dean and Ms McAvoy and myself in the room, so and I think the Chancellor